Yes, people, welcome back. I believe you guys have understood and have seen the first part. In the second part, there is nothing much left. Few things we have already covered. So in the LODR part, I've covered most of it in the class already. Now, what is that, sir? This was the first notification in SCRA, whatever we saw. SEBI, after due thing, it can relax certain norms it seems. What does that see here? SEBI may, after due consideration of the interest of the investors and securities market and the development of securities market, relax the strict enforcement of any of the requirements of these regulations if an application is made by central government in relation to its strategic disinvestment in a listed entity. What is this, sir? Central government, SEBI can exempt a company from carrying on this LODR chapter. It can exempt it when application is made by central government and in the interest of the investors, if it is with regards to strategic disinvestment. Investment means what, people? Buying the shares or securities. Disinvestment means what, people? Whenever a government would need money, central government, whenever it would need money, imagine if there is a deficit budget, I need money, where will I get the money from? So what they will do something called as disinvestment, meaning whatever are the investments I made, I'll be selling it away. In these case, if I'm saying because of some reason I'll not be able to follow some of the regulations, central government can file an application to SEBI. If SEBI is satisfied, SEBI can give you a exemption from the regulations of LODR. Clear? Okay. Mainstream media covered in the class. Shareholder approval required for appointment or reappointment. We have seen the class. Vacancy to be filled. We have seen the class. KMP, seen in the class. Disclosure of events at 2%. All this we have seen in the class. 24 hours. All this we have seen in the class until come to this part. Until that we have covered. This one part we need to see. What is it, sir? Annual report disclosure. Now, people, every company has to give something called as annual report. Now, what they have done, people, the top 1000 listed companies, for them, they have introduced one extra thing in their annual report. Whatever is the annual report which is filed by all the companies, if at all you belong to the top 1000 listed companies, based upon the market capitalization, you guys have to include something else also in your annual report. Now, what is that something else, sir? Nothing but business responsibility and sustainability report. It is also called as BRSR core or BRSR, business responsibility and sustainability report. Business responsibility and sustainability report means nothing but what is the steps you are doing as a company towards the environment, towards the society, and how well are you complying with all the applicable laws. The format is given by SEBI. You have to say, I'm complying with environmental norms, I'm complying with the safe social norms, I'm complying with the governance norms. Governance is nothing but the applicable laws. How well are you complying with all of that? You need to give a disclosure. Where, sir, I have to give it in my annual report. Who and all, sir? The top 1000 listed entities. What about others, sir? Other listed companies, no matter where you're listed, you can be listed on a normal stock exchange or you can be listed even on a SME stock exchange. You guys can implement it as on today on a voluntarily basis. If you want, you do it. Understood? Yes, sir. That is your disclosure. Next one, sir, as I told you, though it is given in LODR, it is more relevant for non-convertible redeemable preference share. We have covered there only in the first part. This also voluntary delisting and private placement and listing that January 1st, 2024. This also we have covered there only. So there is nothing here. Next one, sir. This also, while I was doing you in the class only, I told you there is an amendment. You see this context, you will understand. Yes, sir. You will understand. Yes, go through, but we have covered this in the class only. Yeah. Okay. This was with regards to that, what is that? Rumor verification. Yeah, I told you this only. They have given one date in the, first it was implemented on 1st October 2023. They amended it and they put it that it is applicable from April 1st, 2024. Now they have amended that also and they have put it will be applicable from that day as specified by SEBI. Whenever it says from that day it is applicable. Rumor verification, if you remember. Okay. People, buyback of securities, most of the content and format part, whatever we have done in the class, it is as it is, copy paste. There is no change. But what I would suggest you is, in December 2023, under old syllabus, December 2023, in security laws and capital market, I have already uploaded a video on buyback. Do watch this once. But remember, again, I'm telling you, for your class perspective, whatever the procedures we have done, it is already covered. Amendments are covered. But what would I tell you? There are other aspects as well that is given in December 2023 SLCM buyback part. You guys watch this also once. It is there on YouTube. December 2023 SLCM it is, not CMSL, SLCM buyback. The same provisions are cut, copy, paste. Watch that and you guys try to go through this. Same thing will repeat. Yeah. Instead of me recording the same video content again, I felt rather we can save some time and you guys can watch that particular thing from there. Clear, all of you? Entire buyback is covered there. And all these procedures and all, people have covered this to you in the class only. This you have written. Whatever you have written is updated one only. So don't worry. Yes, the last part is, people, mutual funds. In mutual funds, there is one amendment. Yes, what is that amendment? We'll see. The new definition called liquid net worth has been added, it seems. What is this liquid net worth? Generally, people, in mutual funds, they were telling you, sponsor needs to have a minimum net worth. Sponsor needs to have a minimum net worth. There is the eligibility conditions and all. Now, if you remember, see, in the mutual funds, so there was eligibility criteria for registration of mutual funds. If you want to register the mutual funds, there was some eligibility criteria and all. Yeah, they used to see what is that there has to be minimum net worth, and all of that was there. Now they have they have added one more type of definition that is only called as, people, liquid net worth. Now, what do you mean by exactly this liquid net worth, people? Liquid net worth means, see here, the net worth deployed in liquid assets. What do you mean by liquid assets, people? Simple. Those assets which can be converted to cash as quickly as possible. It can be cash also. It can be bank in hand. It can be money. It can be what else is that which can get immediately converted to cash? It can be government securities, because very risk free. So, sir, they are telling you the new concept called as liquid net worth means something which is money or which is immediately convertible into money at zero risk. Now, sir, that is what is they have introduced, which are unencumbered and shall include cash, money market instruments, government securities, treasury bills, repo on government securities, and any other like instruments as specified by the board from time to time. Meaning, sir, imagine I have invested in gold bonds. Now I need money. Can I go and pledge this gold bonds and can I borrow money? No. Unencumbered means, people, you should not have pledged it. You should have not created any collateral on these instruments till today. So such instruments are called as liquid net worth. Now, what is the significance? We'll see. They have given a new definition of NAV, it seems. NAV shall mean value computed in the manner provided in sub-regulation 1 of regulation 48 of these regulations. Now, what is that sub-regulation 1 is not given for us. But what I would tell you is, if you open SEBI regulations, I hope it will open. In this, okay, forget. So, people, nothing but what I would tell you is, this is not given to us directly in the amendment sheet. What is this regulation 48? The site is not opening. I tried to open it from the morning. It is not opening. What you guys can do, just see what is this regulation 48 given in according to in mutual fund regulations. Nothing, people, simple. Open SEBI regulations, specifically type for SEBI regulations. All the list of regulations under SEBI website will open. In that, open mutual funds. In that, go for regulation 48. This is the most updated one. That's the reason I'm telling you to go and take the picture from here. Now, whatever is given here, this is the new definition of NAV, it seems. Yeah. So just keep that one thing in mind. But what is it is not there in our syllabus. That's the reason they have not given that only in our syllabus. Okay. In regulation 7 pertaining to eligibility criteria of mutual funds. So eligibility criteria, here there is a amendment. Now what is that, sir? Previously it was this. Yeah. The other list is still continuing. You can see all this in your book. But sir, they have removed certain part. What is it, sir? Is everything being changed? No. One part is changed. Two parts. What is that? I'll tell you. Now, sir, if you want to start a mutual fund, sir, what they're telling you, to register a mutual fund, the sponsor should have a sound track record. But now, what do you mean by a sound track record? Sound track record means, people, a person will be considered as having a sound track record. Sound track record shall mean the sponsor should. What is that? He should be carrying on business in financial services for a period of not less than 5 years. So who can open a mutual fund? Who can start? You should be from the financial services background. Yeah, it can be bank, it can be investments, etc. That condition was already there, so nothing has changed. Next one, ensure that the net worth is positive in all the immediately preceding financial years. In all the preceding 5 financial years. Now see here, the net worth is positive in all the immediately preceding 5 years. That was there previously also, it is there now also. Nothing has been changed here as well. Ensure that the positive liquid net worth is more than the proposed capital. Okay, I will come to that. Come to the fourth one. Have net profit after providing for depreciation, interest and tax. Basically after net profit after tax, NPAT, interest and depreciation, in each of the immediately preceding 5 years. Meaning in each of the 5 years you should have profits. Each of the 5 years. Here there is an amendment. Earlier what was there? Earlier it was the sponsor has profits after providing for depreciation, interest and tax. 3 out of 5 years was there. Now they have said in all the 5 years you should be profitable. Sir, how much profitable? 1 rupee profit is sufficient. They have added one more point. It has an average net annual profit after depreciation, interest and tax during the immediately preceding 5 years of at least rupees 10 crore. Meaning what, sir? The last 5 years, if I take an average net profit, they are telling you it should be at least rupees 10 crore. Average it is. Average means, people, all my 5 years profits, sir. If I take an average, it has to come to at least 10 crores. Less than that, you are not eligible. Understood? Less than that, what happens? We'll see. This is also an extra amendment they have added. This is clear, all of you. And next one, there was one more point. This, they have added a few more content. Literal, if I have to say you this way, they have added some content very vaguely. Very, very vaguely. If you read the context also, it's absolutely vague. But we'll see what is that. The net worth in the immediately preceding year is more than the capital contribution of the sponsor in the AMC. Imagine they're telling you the sponsor, whatever is the capital contribution in the AMC, the net worth of the sponsor should be more than this capital. If I have invested, say for example, 100 crore here, my net worth has to be minimum 120 crore, meaning more than 100 crore. This condition has been added. Few more points have been added. What is that here? Ensure that the positive liquid net worth. Understood what is liquid net worth? Meaning which is safe, not some random investment, is more than the proposed capital contribution of the sponsor in the AMC. Ensure that the positive liquid net worth is more than the proposed capital contribution of the sponsor in the AMC, and ensure that in case of change in control of the existing asset management company due to acquisition of shares, the positive liquid net worth of the sponsor or the funds tied up by the sponsor is to the extent of aggregate par value or market value of the share proposed to be acquired, whichever is higher. What is this, sir? Try to break this down and read, people. They have tried to give something, but I feel it's not very well interpreted. Yeah. Now, what do they say? See here. Now, who can be a sponsor? You're seeing eligibility criteria, na? Okay. Ensure that you need to have a positive liquid net worth. Your positive liquid net worth is more than the proposed capital contribution. Whatever you're proposing to invest, your positive liquid net worth should be more than that in the asset management company. So, for example, the sponsor, his liquid net worth should be more than whatever is the proposed capital into AMC. If I'm proposing to invest, say for example, 100 crore, my liquid net worth has to be more than that. Earlier, we used to directly say net worth. Now they're telling liquid net worth only should be more than your proposed capital. Okay. And ensure that in case of change in control of the existing AMC due to acquisition of shares, and ensure that in case of change in control of the existing AMC due to acquisition of the shares, the positive liquid net worth of the sponsor or funds tied up by the sponsor is to extent of aggregate par value or market value of the shares proposed to be acquired, whichever is higher. Now, what do you mean by that, sir? What they're telling you, in AMC, imagine today this person is a sponsor, sir, and because of some reason there is a change in control happening in the AMC. Today I have been investing, sir. Today the control has been changing to someone else. There is a second person coming into picture. Now what they're telling you is, if this person has to be eligible, then what is the criteria? Now see what they're telling you. And ensure that in case of change in control of the existing asset management company due to acquisition of shares, the positive liquid net worth of the sponsor, the person whoever is coming, his positive liquid net worth of the sponsor or funds tied up by the sponsor is to the extent of aggregate par value or market value of the share proposed to be acquired, whichever is higher. Meaning what, sir? Whatever is the amount I'm proposing. Now imagine I'm buying the shares of the AMC. Or the positive liquid net worth. Whatever is this amount coming to and whatever is this amount coming to, whichever is higher, that I should have. Again, I repeat, sir, whatever is my liquid net worth or whatever is the proposed acquisition, it can be, they have used the word, what is the word called as par value, meaning face value, or market value of the shares proposed to be acquired. Whatever I'm buying, whatever is the value of the share, sir, whichever is higher, and that is what is the eligibility that the sponsor should have, whoever is the second person coming in. Understood? That's what I'm telling you. It's very vaguely written. Got it? Okay. Now, sir, this is the eligibility. Sir, what if I do not meet these criteria? Everything is and, people, and. Sir, what if I do not meet these criteria? Can I not open a mutual fund in India? If you do not meet those criteria, people, if the requirements specified under explanation are not fulfilled, then the sponsor shall what? Adequately capitalize the asset management company such that the net worth of the asset management company is not less than 150 crore. Imagine I'm not satisfying these conditions, then they're telling you net worth. Now, first condition they're telling you net worth of the sponsor. What if I'm not satisfying that? They're telling you at least the net worth of asset management company should be 150 crores. Clear? It should not be less than 150 crore. And meaning another condition also. Ensure that initial shareholding equivalent to capital contributed to the asset management company to the extent of not less than 150 crore is locked in for a period of 5 years. Meaning what, sir? Whatever, okay, I'm allowing you, a sponsor, you come and invest it. I'm telling you, whatever is the amount you are bringing in, and that too minimum of 150 crores. Imagine you invested 200 crores, then the entire 200 crores. but the investment should not be less than 150 crore. Whatever you brought in as an investment, as a capital into the asset management company, that initial shareholding shall be locked in for a period of 5 years. You're not supposed to sell it. Read it again. Ensure that the initial shareholding equivalent to what? Capital contributed to the asset management company to the extent of not less than, how much? Minimum 150 crore is locked in for a period of 5 years. It should not be less than that. At least 150 crore shall be locked in. If you have invested more than that, then the entire part will be locked in. Initial capital. If you subsequently invest, that will not be locked in. It's clear? Yes, next one. See, this is also an interesting point. Appoint an experienced person in asset management company. What do you mean by experienced person? CEO, COO, CRO, CCO, CIO, all these people. Sir, they are all big officers, but they are telling you appoint experienced personnel. What do you mean by experienced personnel? People, if you add all their experienced people, the total experience of all these people, CEO, COO, CRO, CIO, CCO, yes, sir, all these people's experience put together, it should be at least 30 years. Not everyone 30. Total combined experience. Meaning, CEO 5, CEO 10, whatever it is, if I add up, it has to come to 30. It's clear? Okay. Next one, sir. Whatever we saw there above, same thing. Ensure that in case of acquisition of existing asset management company, the same thing will again repeat, whichever is higher. Aggregate of par value, market value, same thing again will repeat. Next one, ensure that in case of acquisition of stake in existing asset management company, the shareholding equivalent to at least 150 crore shall be locked in for 5 years. What is that, sir? In case of acquisition of stake in an existing asset management company, meaning, sir, someone else is coming and acquiring AMC, again the same rule will apply. At least 150 crores people will be locked in. Yes, sir, for a period of 5 years. Ensure other conditions in regard as may be specified by SEBI has to be fulfilled. So these are the amended eligibility criteria. Clear? Yes, sir. So next one, this is as it is there, nothing has changed. Yes. And they have added one more. Now what is it, sir? They have added is one more thing, people. The following regulation 7C has been inserted pertaining to norms for shareholding and governance in mutual funds. Now what is this, people? Nothing but imagine a sponsor has started one mutual fund. He started, okay, let us imagine there is one sponsor. He started one asset management company and he started one mutual fund. He is a sponsor. Now the question is there a way where this sponsor can leave this companies and go? Meaning it is called as disassociate. Can I disassociate with my mutual fund and asset management company? Is it possible? Regarding that, they have given you some note. What is that? The sponsor may be permitted to disassociate from the AMC and the mutual fund subject to the conditions as specified by SEBI. So you do the procedures given by SEBI, then you can do it. In the event of sponsor disassociating itself from the asset management company and the mutual fund, the asset management company of the existing mutual fund may act as a sponsor of the same mutual fund subject to the conditions as specified by SEBI. Meaning what, sir? This person is going away. Now who will be the sponsor of mutual fund? Whoever is the existing AMC of mutual fund, he can only be a sponsor of the mutual fund provided he satisfies the conditions specified by SEBI. In the event of the disassociation of the sponsor from the asset management company and mutual fund, the shareholding for any shareholder in the asset management company shall be below 10%. Meaning what, sir? The share, if at all the sponsor is leaving this entity and going, they're telling you whoever is a new person or whoever is the existing person who is already invested in this AMC, their stake will be capped at 10%. No individual can hold. One person can hold more than 10%. It will be capped at 10% if at all a sponsor leaves and go. Okay, next one. In the event of the sponsor disassociating itself from the asset management company mutual fund, The board of directors of such AMC shall have at least 2/3 of independent directors. Sir, this person left in AMC, at least 2/3 of the directors has to be independent because there is no person to regulate you. Okay, next one. If the asset management company fails to fulfill the conditions specified above, the disassociated sponsor or any new entity may become sponsor of mutual fund subject to such conditions as may be specified by SEBI from time to time. If you do not satisfy that, sir, then anyone can become a sponsor by following the conditions specified by SEBI. What are those conditions? Not in our syllabus. Don't break your head. Clear? Yes, sir. So the last amendment, sir. The disqualification from being appointed as trustees, whatever are the disqualifications we had, people. We had some disqualifications, if you remember. Yes, to this list, people, they have added a 6th point. What is it, sir? In case a company is appointed as a trustee of a mutual fund, sir, who is a trustee of the mutual fund, sir? The trustee people is a company. They're telling you, if at all you're appointing a trustee as a company for the mutual fund, the chairperson of the board of directors of the trustee. So of this company, whoever is a chairperson, this chairperson shall be a independent director. Provided that a trustee company already appointed as a trustee of a mutual fund shall comply with this regulation within a period or as may be specified by board from time to time. So this is for new companies being appointed as a trustee of mutual fund. What about the existing ones? They will have to comply with this rule within the time as specified by the board. Understood? Yes, sir. Pakkana. That's all, people. This is your capital market amendments. I hope it is simple. Pay a little more attention on scores, buyback part. Buyback, what's that? I've given you a chart also, a handwritten notes. It is downloadable from YouTube. It is search for December 2023 SLCM amendments. You will have a link to download as well. Download that. I've already written a chart book and I've uploaded that. More than sufficient. It's clear, all of you. Pakka. I hope there are no other doubts. Wish you guys all the best for your exams. Thank you so much. See you guys. Bye-bye.